I made over $9,000 in 1 month trading less than 90 minutes a day before going to my full-time job teaching people how to trade. Let me show you the trading schedule and strategy I use every day to produce consistent results and how it can work for you too. The strategy doesn't take any pre-market prep time, making you spend more time at the computer. All you have to do is sit down, analyze the charts, enter when it aligns with the 5-step entry checklist I'm gonna show you, and after about 30 to 90 minutes is up, you can be done with trading for the day. The most important factor trading with a job is figuring out what works best for your schedule. For me, I like to trade in the morning because the US market open has the best movement. It fits my time zone and my schedule best. The US market opens at about 6:30 a.m. for me, so I can wake up and trade till about 8 a.m. and then move on with the rest of my day. Now, there is important prep that goes into trading and making sure I'm ready to go every morning. But before we go into that, let's talk about what markets to trade. Now, you can trade any way you want. What people don't understand when they first start trading is trading is really flexible. You can trade on a 1-hour chart or a 1-minute chart, which makes it so a trade can last either a couple days or just a couple of minutes. Now, there are really 3 different ways you can go about trading. Some people trade by looking at important levels in the market that they want to keep an eye on, and then they set alerts so they don't have to just be staring at the screens for hours and hours. When they get an alert, they can come back to the computer and look for that potential trade to set up. This is a really good way to trade if you don't want to sit at the markets and looking at charts for hours on end, but you have the ability to pull up a chart and place a trade at any point in the day. Another way is to just place the orders at areas you want to trade at beforehand and let the market play out. It'll hit those orders and then you'll just let the trade happen. This is a more hands-off approach that I have actually never tried myself, but I know there's a lot of people that successfully do it. But really the best way that I found and that I trade is I focus on day trading on a smaller time frame chart and only trade when I'm at the chart. This allows me to take really quick trades when I'm watching the market, and then the trades will be done really quickly and I'm ready to move on with the rest of the day and I don't have to think about it. I found this is the better way to do it, as trying to juggle work and trading throughout the day is really hard to do. And I find it way cleaner to trade in my allotted time for the day than not worry or think about it the rest of the day. This way, trading is just one thing you do in the day and it doesn't control and take up your whole life. Now, the strategy that I use for trading can be used on really any market or time frame, because all I'm using is just reading the price action of the chart and the patterns that the candlesticks create. So if you want to trade this on Forex, crypto, or any other market with a different time frame, you really can, because the signals will still show up and mean the same thing. But my trading schedule doesn't start at 6 a.m. when I wake up. It actually starts at 8 p.m. the night before. At 8 p.m. I have a relaxing hot shower, I journal and plan my next day, then I stretch and then read until I fall asleep, which is generally about 9:30. Then I naturally wake up at about 6 a.m., have a cold shower, and head to the computers, open my charts up around 6:30 and trade for that about 60 to 90 minutes a day. Now, you don't need to do all that to be successful at trading. There's definitely days where I don't do that and I still am able to focus and be good at trading. The biggest thing to focus on though is to make sure you are well rested and focused to trade. You don't want to go into a trading day distracted, frustrated about something, because that's gonna mess up your trading and cause you to lose money. This is another massive factor why trading a short period of time is actually better than trying to sit at the computer for 6 hours a day. You can focus really intently for that short amount of time and then move on with your day. I pretty much bet all my money that almost all traders will be more consistently profitable trading shorter amount of time and taking less trades. I also don't even trade on Mondays because it allows me to switch from weekend mode to work mode. And having that day to transition, I realize helps a ton, because I don't know about you, but I'm not really ready to go all out come Monday morning. And speaking of mornings, I made a little over $1,700 this morning in my 90-minute trading window. Let me break down to you exactly what that strategy is. I'm going to show you how I read the market, what patterns I'm looking for, how I entered into the market, and how I manage the trade once I'm in it. Now, the first thing that I do when I open the charts up, at 6:30 in the morning is I zoom out, because for my strategy, what I'm doing is I look for reversals in the market. That's all I look for. Again, going back to trying to take less trades and focusing on something important, I realized that just looking for key areas of resistance and support in the market, and then looking for either taking a buy off of the lows or a short and betting the market's gonna go down off the highs, is way more successful. I spent years trying to figure out what works for me, and I've realized that this works for me. And so what I do, I just come in and make these levels, just seeing, okay, we have 2 clear touches here. I wanna just wait for the market to come down to this. And so zooming in on this, okay, it's about 7 o'clock and the market's getting close to our level down here. And so what are we gonna do? I'm gonna expect that the market's going to reverse off of that. And so instead of buying off of this chart right here, this is a 15-minute chart of oil futures. I'm actually going to go down to a 1-minute chart and analyze the trend more closely and enter in on a 1-minute chart, because it gives you more accurate of an entry. There's a lot more candlesticks going on that tell you more of a story, and you can see when you potentially want to get in and take a trade. And then when it comes down to our level, we can look for a few key factors and bet that the market is going to go up from there and capture a really nice swing to the upside. And so to show you this isn't just a random trade that I've pulled out of thin air in hindsight, here is a recording of me entering in this exact point in the market for a long, betting that the market's going to go up, trying to generally get risking about $600 to make about $1,800. And so to get into why I entered right here, well, the first thing in that checklist that we're gonna go over is always looking for that zone. The first thing I do every morning is wait for the market to come to that zone, because these are key areas in the market. And so the whole reason with drawing these levels on a larger time frame chart like this 15-minute chart is that these larger levels are more likely to be stronger, causing a reversal in the market, that we can then go to a smaller time frame chart, get a more accurate entry, and capture a good swing that we can easily profit from. And so the next thing in my checklist is looking for this downtrend being broken. And so you can see actually before here, I entered down here, but the market actually pretty much set up my strategy over here. And so again, going through my checklist, is the market broke this downtrend into this level pretty clearly right here, and then made a solid pullback. And so what I like to do is I think of this as a head and shoulders pattern right here. It sets up a really clear head and shoulders pattern. The idea is if that head and shoulder pattern breaks to the upside and it's shown a lot of strength of potentially bouncing off of our support level down here, well, it's more likely to work in our favor and we can catch a good trade from it. But the thing is that there was news happening at exactly 7:30. And so you can see at 7:30 right here, there was a really big candlestick that went all over the place. And so for me, I like to avoid taking trades in news because crazy things can happen. And you can see after that news happened, it kind of spiked up and spiked lower. And so I like to skip the trade and wait for this better setup down here. So what the market did was it sold off really hard right here. Again, I'll go right back to the basics of starting and waiting for this downtrend to be broken. And then the key that was really important here that I really liked is, so the market's already tried to bottom right here once. So it's put in a low pretty much right here from the low of this candle. And what the market really likes to do that I've noticed is it likes to make kind of a bottom like this. And then a lot of the time it'll make one final flush lower before it reverses. And so what this flush is, I would say, is it's essentially, it's stop hunting, whatever you want to call it. It's getting a lot of people probably went long here, and this is knocking all those traders out. And so it's hunting for that volume and liquidity. It's making a failed attempt to break lower here and keep this downtrend going short as well. And so it does a massive reversal. And so often it will reverse really quickly when that happens as well, if that move fails. And so to go right back to where I entered, just to show you this, what I was looking for was, well, I wanted to see this downtrend break and I wanted to see it lose that momentum. And so you can see right here is there's about 4 or 5 candlesticks just sitting right here. And I'm saying that that's the market losing momentum. It's barely broken out of this low. And so because of that, I think that the market's going to reverse here, and it's going to just have a massive momentum switch to the upside, because this is its final exhaustive move to go lower. And moving forwards again, you can see that it pretty much did that. It had that attempt to go lower. It had that kind of started to bottom. That downtrend was pretty clearly broken. It made one more flush lower. I looked for kind of a consolidation, and my signal was pretty much the final signal to get in was this strong bullish candlestick here. It showed me, okay, there's momentum coming into the long side. It's going to reverse this, and I jumped in pretty much on that breakout. And it, it had a little bit of a pullback here. It's a little scary, but it pretty much reversed from there and then just shot up higher. And then so how I manage that and get in is, well, I like to put my stop loss right below here. And so you can see this little Fibonacci retracement tool like looking thing on my chart is essentially, it's telling me how many contracts to trade if my stop is here and my entry is here to hit my risk target of about $600. It'll say I need to trade 3 contracts. And so you can see I entered in here, my stop was here. And if it hit here, I would have lost about $570. And then it allows me to see, okay, where's 1 times, 2 times, 3 times my risk. And so once it starts to get up to 3x, I like to tighten up my stop. But previously I moved to break even when it got to about 2 times my risk, because the whole idea is if it comes up here and pukes all the way lower, I want to get out. The market usually works like this. If it's a good trade, it'll go really well in my favor, and it will reverse if it's not going to. And so I'd rather get out at a scratch. And then you can see here, it had a little pullback here and broke higher. And so I then again moved my stop loss there, captured that 2 times my risk, about $1,200. And then you can see it's still going. And so I started to see there's kind of a tight trend line here, and I am totally fine getting out if it breaks that or some kind of micro pullback, because I like to try and let these things run as much as they can, but I would rather get out at about 3x. That's generally my target. I found it's best to go for that. Sometimes you can get massive trades that just go in your favor, and I'll hit like a 6x. And you can see I moved it up on this slight little pullback right here, because again, I'm thinking, okay, it's either gonna hold this or it's gonna reverse and I'll get out. And so the market ended up pulling back, knocking me out for about $1,700. And you can see it's 8 o'clock. And so then I moved on with the rest of my day, but I traded for that about 90-minute window. And that's pretty much what I do every single day. Now, the one crucial thing that I gloss over in this video is really the 5 factors of how I draw these support and resistance levels. It's really easy to draw them incorrectly, and then you're taking trades at areas that are more likely to fail. And so watch this video right here, because I go into every detail in defining those levels, which is the foundation of this strategy.